Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of November 4th through 8th. Now, before I begin, make sure you guys are always reading the report first before you watch this TA video. Remember, I have way more details on what our actual swing trade ideas entail for this week. For example, I provide the exact option contracts that we need to be looking to execute on for each swing trade idea, or the exact 3-point game plan for each swing trade idea using equity. And that is just a small snippet of what the weekly report says, so make sure you guys are not only watching these technical analysis videos. With that, let's take a look at the markets. So we are officially on the second month of the last quarter of this fiscal year. And we are also in our very first full trading week of November. And unsurprisingly, last Friday, which was the very first trading day of this month, we closed up 0.42%. However, I am a bit slightly concerned about last Friday's daily candlestick. Why, you ask? Well, we have what we like to call a gravestone doji candlestick. Now, yes, it's a red candlestick, but there's a lot more to this candlestick because it is a gravestone doji candlestick. And so what makes up this gravestone doji candlestick? Well, we have this very, very long top wick and almost non-existent bottom wick and a very, very small body for the actual candlestick. And again, this very small body is caused by the opening price and the closing price being very, very close to one another. Now, this gravestone doji candlestick is bearish enough alone, as this top wick clearly shows us that during last Friday's price action, we saw a lot of bears putting a lot of overhead pressure to the point where buyers were kicked out completely and even into the close as the price broke below the opening price and just closed right below that opening price. And so this gravestone doji candlestick is bearish, but on top of that, we have what we like to call an inside day candlestick. So last Friday's high was at 575.55 and last Thursday's high was at 575.63. And overall, the highs and the lows of Thursday are completely encompassing last Friday's highs and lows, making this an inside day candlestick. And why does this make this gravestone doji candlestick even more bearish? Well, an inside day candlestick means that we're about to see a continuation of the underlying price trend. And currently, what is our underlying trend? Well, unfortunately, it's to the downside because last Thursday, we officially broke below this rising wedge chart pattern, this macro rising wedge chart pattern that began at the lows of August. And I did tell you guys that there is a higher probability of the markets breaking over to the upside and out of this rising wedge chart pattern during a bull market. But due to the conditions that we saw last week, for all of last week, and completely aligning with each other to providing a complementing bearish market condition and sentiment, we saw the price breaking below this rising wedge with a lot of selling volume as well to confirm this breakage below this rising wedge chart pattern, and officially confirmed this bearish chart pattern as well. And so that is our current underlying trend. Now, what is making me a bit more concerned on top of all of this is that my daily 10 SMA, this red line, and my daily 21 SMA, this light blue line, is about to show what we like to call a bearish SMA crossover. So what we're seeing now is my daily 10 SMA slowly curling down, trying to catch up to the actual price action or the candlesticks itself. And while it's doing that, it will eventually converge with my daily 21 SMA, which is about to flatline and basically cross below the daily 21 SMA. And so that is what we like to call a bearish crossover, when a smaller SMA crosses below a larger SMA. And that will officially confirm that the short to mid-term trend is to the downside. Now, to put this pessimism aside and to kind of balance things out, the only optimistic indication that I saw last week was for the fact that even after Thursday's price action and gap down along with this very large selling volume, the price still decided to respect the massive support area that came from the rising daily 50 SMA, this dark blue line, that eventually allowed overnight buyers to, launch the price up from last Thursday's close to last Friday's open, and then obviously that early morning big push to the upside. Now, for this week and possibly into the next couple of trading days, I really want the price to uphold this daily 50 SMA. I don't care if we have lower highs or even maybe lower lows. If the daily 50 SMA begins to curl down, all I want to see is the price continuously respecting the daily 50 SMA. Now, in the event that this ideal scenario does not work out for us, all I want to see is the price respecting the parameters set up by the most important levels that I have highlighted for the past couple of weeks. The previous all-time high level of $563.50 and the current all-time high significant resistance level of $578.50. So again, all I want to see is the price constantly bouncing off of 563.50 and constantly rejecting the 578.50 resistance level. All right, I've stated this multiple times on all the other CFO Swinger Watch Reports technical analysis videos. So again, just for this week, all I want to see is the price staying over the daily 50 SMA. All right, so make sure you guys are watching out for your long positions and make sure you guys are always hedged. All right, with that in mind, let's take a look at our very first swing trade idea for this week, ADEA or ADEA. So this time frame that we are on right now is the 3-month time frame, or what I like to call the quarterly time frame, because every single candlestick that you guys see here is 3 months worth of price action and just overall trading action. And again, that is one single quarter. Now, if it wasn't too obvious already, right, we can obviously see a very massive macro flat base chart pattern that ranges from $3 all the way up to $12, right? So this is a huge range that this stock has been in since its IPO back in October of 2003, right? So this is a very massive base that caught my eye over the weekend. Now, specifically, the current price action that we've been seeing for the past 2 years, well, specifically, we had a very nice gap up back in October of 2022, and the price has ultimately stayed over the gap lows of this specific candlestick in 2022. And so on this 3-month time frame, the price has been able to stay very, very tight while forming an accumulation phase right underneath this macro significant resistance level of $12. And just recently, we began to start closing over this $12 massive resistance level. For the very, very first time that we've ever closed over this level was back in October of last year. And it seems like we're having kind of a very, very similar pattern here, with October being very, very significant candlesticks here and months for the past 2 years. And so basically for this month, okay, if you go on the monthly time frame, on October of this year, we're able to close over this $12 resistance level once again. And so we're trying basically to see an eventual big breakout out of that massive macro base, since we're initially or basically peaking over this $12 level, or out of this macro base chart patterns massive and significant resistance level. And during the entire time of consolidation and accumulation, we've also formed a very bullish chart pattern on top of that flat macro base, an ascending triangle, right? So we have this ascending support trend line that signifies this ascending triangle chart pattern. And so as long as we're able to see more and more bullish momentum and volume to officially allow the price to break over and stay over this significant resistance level of $12. Since again, I don't know if we're gonna break below $12 again and maybe continue to move sideways, but as long as we're able to see a lot of good volume coming back into this name, or back into this name, since we've had a lot of volume back in 2020 and 2021, if you were to see similar amount of volume coming in, then most likely we can see new all-time highs as the price breaks out of this massive 2 decades worth of just simple sideways. Obviously not that simple, since the price has been ranging from $3 all the way up to $12, right? And that is the reason why our official long entry point is at 13.10, or specifically out of this current, okay, resistance level of $12.85, as seen here on the weekly time frame. So again, I just want to see more confirmation that we're able to break over this current $12.85 resistance level, and so we can get a nice entry point over the whole number level of $13. Now, I do have to remind you guys that this name does have earnings this week. Again, it has earnings this week on Thursday after hours. So who knows? Maybe earnings might just allow this stock to catapult up higher and potentially set us up with a nice opening range breakout swing trade. And last but not least, we have LUNR, or basically LUNR. All right, this ticker symbol is telling us that this ticker is spelled out to be pronounced lunar. And it makes perfect sense, because this company is based on space. So Intuitive Machines has been making some, well, international chatter as it became the very first private US company to land one of its lunar landers on the moon, right? And so this company has been awarded a lot of money from NASA to be one of its major and one of its main contractors for its current Artemis project, right? And that is NASA's moon project to bring humans back to the moon and to establish a long-term human presence on the moon itself. And so lunar is about to have potentially a significant role in the near-term future, I would say, next 2 decades at least, as a major space company. Now, from a technical perspective, this ticker here has been making a very, very nice bull flag. And this bull flag comes after a massive breakout from this $6 whole number level and this whole number level of $4.50. And this $4.50 resistance level was formed after this very nice consolidation between $3.25 and this $4.50 resistance level. And ultimately, we had a very, very nice W, or what we like to call a double bottom chart pattern. And after this double bottom chart pattern was formed, we saw a massive breakout over that neckline resistance level of $4.50, and we haven't looked back. And so after this impulsive run up from that breakout of $4.50, we have now made this very, very textbook looking bull flag or bull pennant, to be specific. Again, those are synonymous names. It doesn't matter what you guys use as long as you know and understand that this is a textbook looking bull flag or pennant. Now, on this weekly time frame, I love the fact that the price has been riding the weekly 10 SMA the entire time, and even as it consolidates, it has allowed enough time for the weekly 10 SMA to finally catch up, as last week was the very first week when we saw the price retesting and pivoting away from this weekly 10 SMA. And I love this initial reaction to this weekly 10 SMA because it basically tells us that the buyers are still very much present on the short-term SMA here, and it could potentially tell us that there is a lot more buyers left to provide enough steam and energy to eventually break over and out of this very nice macro bull flag or bull pennant. Now, the weekly 21 SMA is lagging a little far too behind for my comfort zone, I guess. But at this point in time, I am really focusing on this flag as a momentum flag or a mobile bull flag. So we don't really need the support of the weekly 21 SMA because, again, if we were to wait to see the weekly 21 SMA to catch up, at that point, the price will most likely be in a downtrend and completely breaking this very nice looking textbook bull flag. All right, we do not want to see that, right? Since we have been basically moving sideways for about 5 weeks and a half. Okay, and specifically, we've been moving sideways between these whole number levels that go right through this flag of $7.50, which is our current support level, and $8.75, which is our current resistance level. And that is the reason why our long entry point, our official long entry point, will be over $9. Now, I didn't put $9.10 or even $9.05 for confirmation because if the price is at $9 or exactly at 9.00 flat, the price will officially be over 2 major resistance levels. First will be the descending resistance trendline that makes up this very nice textbook bull flag, and it will be over this resistance horizontal level of $8.75. So again, that alone confirms that the price is breaking over and out of this macro bull flag, and that is the reason why I did not put $9.05 or $9.10 for that extra confirmation. Okay, and just like with every other technical analysis video, you guys can find all the details on our entire 3-point game plan with the stop losses and profit targets for both ADEA and LUNR in the actual CFO Swinger Watch report. All right, so that is it for this video. If this technical analysis video was very, very insightful and most importantly applicable, make sure you guys leave a like down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button. Now, if you're watching this video when it just became public on Monday and want to watch this video a day earlier when it's private on Sunday, all you need to do is become a part of the many, many readers of the CFO Swinger Watch Report and a member of the private CFO Discord. You can get 50% off for your first 30 days. It's a first come, first serve basis. So all you need to do is DM me on Instagram at chartsfocus1. Again, my Instagram handle is at chartsfocus1. Okay, and that's all you need to do to claim your spot. Good luck, and I'll see you all tomorrow morning.